Does the Bitcoin bull market feel a little different this time around?
It's evolving.
But I think there's this thing. It was almost like the first time around, it was like, when you'd go out with a friend in college who had never really drank before in high school, and they would just be a sloppy mess. That was
me.
That was you. But the people that never went out before, and then they would just be, by the end of the night, they'd have their head in a toilet or the trash can.
Where are you going with this?
That was the Bitcoin people the first time around. They were the sloppiest drunks in the world for that bull market. They were throwing out these price targets that were just absolutely insane.
Now Bitcoin is sipping on some cognac.
Yeah, now it feels like, okay, act like you've been there before, and people aren't quite as crazy as they were last time. I haven't heard one $400,000 price target yet. Have you this year?
You just haven't been paying attention.
But it just feels this time around like it's kind of like, okay, everyone settle down. We've been here before. Don't worry. Don't blow it.
Is now where we show the overlay of Bitcoin price versus Bitcoin Google search trends?
Yeah, one of those things. And so it's save for that 3-day period when it went parabolic. It's basically back to the highest it's ever been.
You mean back in December 2017?
Yeah, in 2017.
That was a lot of fun.
It was actually. I
even though my cash was on the sidelines, that was a lot of fun. And this is a little bit more fun because you and I are crypto investors barely.
I put enough money in 2017, so it wouldn't change my life, but it was enough where I wouldn't be annoyed if I was not involved in this. And I've dollar cost averaged ever since.
Huh. How do they get this in? How do they crowbar this into a target date fund?
Yeah, it's like, I don't know, Blade Runner instead of, it's like target date 2049. I don't know. But now we're starting to see, here's the other ways that it's evolving, because here's one of my biggest beefs with it. How many people in this space, and it doesn't matter, but how many people have been right for the wrong reasons? Like everything we heard in 2017 about...
Man, you're a tough crowd.
No, I'm just, everything we heard about what this Bitcoin was going to do to decentralize everything has not happened. But I think it has evolved into the point where now everyone has pivoted to, it's actually Bitcoin is going to be the next gold. And I actually think that's probably the best case scenario for this, don't you, for this asset, where it's seen as a store of value for younger people that trust more in technology than a little piece of metal. Isn't that a better case scenario than what people were laying out in 2017?
Well, don't you think we're still super early days? What if it becomes a place, a currency where people are actually transacting? Obviously, the PayPal news makes it one step closer to that.
It could.
I think that's still possible.
I just think it's the longer it keeps sticking around and coming back every time it has one of these big, huge, brutal bear markets, the stronger it comes, and there's more trust in it. And I just think that.
Don't you feel foolish talking about it? Only because I literally know nothing. I feel silly even giving opinions.
Well, of course, it's still a speculative asset, and it's always going to be. But so is gold, and that's. I don't know. It hasn't been around.
What isn't? What asset is not speculative except for treasury bills?
Well, I mean, it's not useful for anything yet, is it? What can you do with Bitcoin besides make money on it?
Today.
Yeah, but I'm just saying, doesn't it surprise you all the money that went in? What happened to all those ICOs? Remember all those ICOs, those initial coin offerings we had?
Yeah, they're gone.
Okay, what happened to them? None of them worked out to do anything?
But what's your point?
I don't know. I'm surprised that nothing. It's not like 2017 is that long ago, but all the money that flooded in then was purely a speculative boom, and none of it, from the internet, when the internet in the 90s went crazy, they built all those fiber optic cables, and those ended up, even though we had a boom and a bust, all those fiber optic cables that were made helped power the next 2 decades of the internet, and were this amazing thing. Yeah, but
you're acting like it's been 20 years. I mean, we're just starting. So, for example, this is maybe not a fair analogy, but if you looked at Netflix in 2011, like I did, and you were like, "This is a piece of junk. Let's short it." It changed. I mean, in 2009 and 2010, the library on Netflix was legitimately terrible. It was all movies you've never heard of with a few brand names. And the Netflix in 2020 looks nothing like Netflix in 2010. And I think that you might say the same thing about Bitcoin in 2030.
But I'm saying, I think it's a positive for Bitcoin investors that maybe all that stuff never happens and it still works out. I'm saying that's a positive, that if none of these amazing things happen that they were talking about, how it's going to take over the dollar and the Fed is done and Bitcoin, computers are going to run everything. If that never happens and it's just a store of value, I still think that's a win for Bitcoin.
The New York Fed did their total debt report. Is that what it's called?
It's called the Quarterly Report on Household Debt and Credit.
Total. Okay.
Yeah. And it's
what did we learn?
Chart people like us, this thing is great. So they break out like the total debt composition by all these mortgages and home equity lines and auto loans and credit cards, student loans. Here's the thing that jumped out to me. They do mortgage originations by credit score. And in the latest quarter, which was third quarter 2020, the biggest mortgage originations are now higher than they were in the bubble. Well, actually, so the highest level was 2003, actually. It's back up to that level. But the biggest jump came from people at the high end of the credit score, 760 and above, which...
And that's not because they're relaxing their credit standards. If anything, it's the opposite.
I think what happened was I refinanced my house, and then because I have such a good credit score,
But your credit score is 1 billion, so it raised the average for everyone else.
Did we tell everyone you sent me? What did the T-shirt say that you sent me?
I said you a T-shirt that said whatever you said. I think it was I have pretty pristine credit score.
Yeah, although that was my exact quote. Okay, I didn't realize that.
Is that a workout shirt? What do you do with that?
I don't know. I think I wiped up the floor for my kids when they spill stuff. No. But it's the biggest jump was all in people at the highest end of the credit score. So that's a good thing. But they also broke it down by age. And so it's broken down by 20s, 30s, 40s, 50s, and up. And there was this huge jump in people in the 30s and 40s. And so here's the numbers. People in the 30s, I looked at the low. Mortgage, and this includes refinances too, so that could be part of it. The reason that people with higher credit scores are able to refinance and they did it in mass. But either way, that's a good sign, right? If people are refinancing, that's more, disposable income that they can use because.
I saw Len Kiefer tweet that the average savings from all those refis was, I think, $2,000 in the first 12 months.
That's great, right? That's money in people's pockets for lower interest rates.
Yeah, that's the cash on the sidelines, by the way. That's where
people in their 30s went from a low in 2011 in Q3 of $62 billion in mortgage originations to nearly $300 billion in Q3 2020. And they went from 21% of total mortgage originations, I can't say that word, to more than 28%. So this 30s cohort went from basically doing nothing in the real estate market to now having a huge jump up. And I think that is just going to continue to steadily rise, don't you? As this trend, back to your talk with Logan.
Mm-hmm.
So the Census Bureau puts out the most common average age over time. So in 2025, the most common ages will be 30 to 34, 35 to 39, 25 to 29, 40 to 44, and then 20 to 24. Wow. That's the top. And if you go out to 2035, the most common ages will be 40 to 44, 35 to 39, 30 to 34, 45 to 49, and 25 to 29.
The 2030s are going to be so bullish for stocks with all this pent-up demand. Peak earning years.
Or Bitcoin, right? I'm just saying the housing market, if I had to bet on what it means for the financial markets, that is not quite as easy for me to make that connection. Because
Are demographics not destiny?
I would say demographics are more destiny in the real estate market than the stock market. How's that?
I think demographics are a ticking time bomb.
Okay.
Speaking of demographics, the Nikkei now show Japan. It's at a 30-year high. We haven't spoken about that.
Yes. If you put your lump sum in 1989, you've now been made whole, right? And all the people on Twitter are wrong now.
What if you were dollar cost averaging along the way? Then you did pretty well. So this chart showing the total debt balance and its composition, it makes you realize that for as much as we talk about student loans, credit card, and they are big numbers, so don't get me wrong, but by far, the biggest number, 69% of all total debt is the real estate market. Yeah. Or I should say, actually, not even, just mortgages.
Yes, it's a huge, huge number. And the fact that people are now doing so at lower interest rates. So if you bought a house previously, now you're refinancing at a lower rate, you're in a pretty good position financially because your housing price has gone up and now your payment has gone down. That's a pretty good place to be, right? So
yeah.
The one pushback I've gotten from people saying, well, we've done all this forbearance stuff, and that means when this all goes off the books from the pandemic, there's going to be a huge flood of supply to the market because these people who haven't been able to make payments, they're going to get backlogged on payments, and then they're not going to be able, so those and to me, I think demand would take that up right away Don't you think? Like there's going.
Well, yes, especially because maybe this is actually part of the reason why. But single family homes dropped to record low 2.4 months supply. This came from the National Association of Realtors. And I think the president of this company said that we're short like millions of homes.
Yeah, we need like
not that they're short the housing market, but we need
not
more
the big
homes.
short. Right. There's not enough homes being produced. And I really don't think that the home builders are incentivized to do so because it would eat into their margins and it's easier for them to produce what they can now instead of like just all of a sudden ramping up. They almost need what happened after World War II where the government just said go crazy and build more homes. But yeah, I think so. If there was a huge rush of supply, I think demand would soak that up really quickly because there's going to be all these young people who just want and need homes.